Hello there, this is Slav Polinski, Slav Polinski Homes. I hope you're doing well, and here is your January 2026 real estate market update. I'm going to cover several things here today. And number one, we're going to cover several towns to see how they did in 2025, as well as a couple of the surrounding counties. We're going to talk about changes in affordability, expectations of real estates compared to last year, and the expectations of the real estate market as a whole. Not too long ago, interest rates did drop to the lowest point in the last 3 years at 5.99. Currently, they're averaging between 6.1 to 6.2% as we're recording this video. What does that mean for the average buyer? Well, if they were buying a house, let's say at $400,000, they were saving about $300 a month compared to the 7% that they would have paid last year. So making the homes more affordable for them. But let's jump right in and check out some of the data from 2025 of some of these surrounding towns here in the Chicagoland area. Let's begin with Downers Grove and the median sales price in Downers Grove. Now, all of these are going to be for single-family detached homes. If you would like information on condos, townhomes, or maybe in a town that I didn't mention here, just contact me. I'd love to share that information with you. But with Downers Grove, 2025 seen an increase of 5.1% over 2024, and a total of 12.4% over 2023. So Downers Grove housing market has been very solid for the last several years. So now let's take a look at the month supply of inventory in Downers Grove. And again, this is what determines whether it's a seller's market, buyer's market, or a balanced market. 4 to 5 months of inventory is considered a balanced market. Anything below is a seller's market. Anything above the 5 months is considered a buyer's market. How they determine this is they take a snapshot of current homes on the market for sale, current buyers that are actively looking, and if nothing changes, this is how long it would take to sell off all the homes. Downers Grove finished with a 1.1 month supply of inventory at the end of December, which clearly is still a seller's market compared to 1.3 a year ago and 1.2 2 years ago. Now let's look at the median sales price for Naperville. Naperville ended up with median sales price of $699,500, which was 1.4% over 2024. And 11.3% over 2023. So Naperville, too, has experienced some great growth in home values over the last several years. Naperville also finished at 1.2 months supply of inventory at the end of the December, which was up from 2024, which was at 1.1%, but still highly in the seller's market. Now let's take a look at Westmont. Westmont finished at 7.7%. Over 2024 in the median sales price. Westmont has really seen some great growth over the last few years, and a lot has to do is the affordability. In the past, Westmont's home prices on average were slightly less than, let's say, Downers Grove and Naperville, which produce opportunities for those buyers to get into a home. And so they've seen some great activity over in Westmont. And looking at Westmont's month supply of inventory, that's also at 1 month supply of inventory. And again, strongly in a seller's market. Will that change in 2026? Well, it will depend on whether sellers feel motivated with interest rates getting down to 6% now. The majority of the sellers I have experienced over the last couple of years have been either downsizing or moving out of state, moving into assisted living. I haven't seen as much move up sellers, meaning sellers selling a home and moving into something larger, as I have seen in years ago. Now, let's look at a couple counties here in the western suburbs. I chose DuPage and Kane. DuPage at the end of December ended up with the median sales price 5.5% over 2024 and 15.2% over 2023. With month supply of inventory in DuPage, I wanted to go back 10 years so you have kind of a perspective of what used to be 10 years ago and where we are now. In 2015, DuPage County had 5.5 months supply of inventory. It was a balanced market. As you'd notice, in 2020, the supply of inventory just plummeted. There was a lot of buying activity because of interest rates being at 2.83%, and homes just went right off the market. And it's showing slight increases, but we have a little ways to go until we get to a balanced market once again. The last county I want to cover is Kane County, and Kane County at the end of December experienced a growth of 6.1% in median sales price and a total of 14.6% over 2023. Again, same thing as the other suburbs here in the western Chicagoland area. The 2026 housing market forecast is seeing that interest rates will stay in the low sixes. Inventory is expected to increase anywhere from 8 to 10% depending on the location that you're in. And home prices, they're expected to still rise, but at a more moderate rate at about 1.5%, 1.6% compared to what we've been seeing before, 5, 6, 10% per year. An interesting fact is last year was the first year that the increase in income has exceeded the increase in home prices, making homes more affordable. And again, if a home buyer is purchasing a home this year at about 6% compared to 7% last year, a $400,000 home, that's about $300 a month. That's a considerable amount of savings. So affordability is starting to come back, and hopefully for buyers, that'll continue on that trend. Now, our government currently is taking some steps in making homes more affordable for the average buyer through making corporations more difficult to borrow money to buy single-family homes. That's not a big issue here, but down in the South, Southeast, Southwest, I've heard corporations buying up whole new subdivisions and really just pushing the average buyer out. Their proposal isn't going to keep them from buying a house altogether, but making it more difficult. Also, there are programs being talked about, being able to float your 401k without any penalties to make that purchase of your home. And of course, you may have heard the talk about a 50-year mortgage. I'd love to hear your opinion on the 50-year mortgage. There are some definite negatives about that, and there's some positive aspects. So negative is, keep in mind that at the beginning term of your mortgage, you're paying almost all interest, right? So you're going from a 30 to a 50-year mortgage. You have a longer period of paying mostly interest and hardly any principal on your home. That might not be an issue if the home values are going up 5, 10% a year. But if home values are expected to have just moderate increases, well, it's going to be hard to get out of that home to, let's say, buy another home. On a $500,000 home, that extra 20 years of mortgage payments equal to an extra $400,000 in interest paid on that home. Now, on the other hand, let's just say this buyer, for whatever reason in their finances, just barely missed qualifying for a 30-year, but they could qualify for a 50. And if their income is sufficient enough where they could pay that extra $50 to $100 a month towards their principal every single month, and they are disciplined to do so, a 50-year mortgage might not be that bad of an idea for them. So we'll see when more details come out, and as always, proceed with caution. One of the trends we began seeing in 2025 is homes staying on the market longer. Home buyers, because of home prices going up and their monthly payment going up because of the combination of the interest rates and home prices, are taking their time in making that decision. They want to make sure that if this is the money they're investing in a home, that this is the right home for them. So 3 years ago, if a home was on the market for more than 3 weeks, people were wondering what's wrong with it. Before 2020, as I showed you the graph in 2015 when we had a balanced market, it was very common for homes to be on the market 60 to 90 days and nothing wrong with it, and nobody even thought twice about it. We're getting back to that, so just expect that if you see a home that's on the market for a while, might not be anything wrong with it. It's just that it's just taking longer. They might have priced it a little bit too high at first, and now they're reducing the price. So it's always worth taking a look. This is great news if you're a home buyer because it gives you the opportunity to be a little patient, maybe get that second showing to view the home to make sure it's the right one for you. And for sellers, it just means a little more patient in knowing that it may take more than 2 or 3 weeks to sell your home. And just keep in mind the amount of growth you've seen in your equity over the last 5 years in the area that you live. One of the questions we hear every single year right after Christmas is, when will the homes start coming on the market? And here in the Midwest, boy, that's a tricky question. It's very weather dependent. If the weather is mild, it's a mild winter. Number one, we start seeing more homes coming on the market and buyers getting active and eager to look for a home. If it's cold, and it's been brutally cold here in the Chicagoland area over the last couple of weeks, things slow down a little bit. But once it starts warming up, just be prepared. Here's one last tip I want to share with you. If you're interested in buying a ranch home, there's a lot of demand for ranch homes right now. So be prepared to move quickly when one comes on the market. If you're in a home and you're considering selling a ranch home, this may be a really good opportunity for you. I was at a summit a couple weeks ago and talking to other agents. Everyone has clients looking for a ranch home. And why is that? Well, people in their 50s and 60s, or maybe even 70s, are looking to downsize from their two-story home to easier living, meaning one-level living. Well, I hope this information was helpful for you, and I'd love to hear your comments or any additional questions. I am so excited about the real estate market in 2026. And if you have any questions about buying or selling in the Chicagoland area or South Central Wisconsin, give me a call. I'd love to help you realize your real estate hopes and dreams.